The silent executioner. Confronting the ego in trading. Your last trade was statistically perfect. Everything aligned exactly with your strategy. The entry was precise. Your risk-reward ratio was a disciplined 1-to-2. You remained absolutely loyal to your protocol. Then, without warning, the market reversed. You were stopped out. Now here is the definitive question. How did you react? Were you able to maintain a stoic calm, accepting this as an ordinary occurrence? Or did you succumb to those dark, familiar impulses you know are toxic? Did you feel a desperate internal urge to prove the market wrong? Did you feel the need to justify yourself, to prove you weren't mistaken? Did you want to scream that your intellect was superior and that you didn't deserve this? Do you know whose voice that is? That is your ego speaking. It is the silent saboteur, methodically destroying everything you have worked to build. It hijacks every edge you have gained, snatching it from your hands simply because its pride is wounded. It has zero regard for your financial well-being or the longevity of your trading career. The source of failure. Here is a truth that most traders live in a state of perpetual denial about. The inability to generate consistent profit rarely has anything to do with a flawed strategy. It isn't the fault of your indicators or your broker's spreads. It isn't the result of market manipulation, algorithms, or whales hunting your stops. The obstacle is you, specifically your ego. Your ego wants you to believe you're the exception to the rule in these markets. It whispers that in an environment where winners follow rules, you can somehow be exempt. It tells you that this time will be different. Every time you listen to it, you are feeding a monster. In reality, you are effectively transferring your wealth to traders who have mastered their own egos. Today, we confront the most dangerous adversary you will ever face. It isn't volatility, and it isn't even fear or greed. It is your ego, the invisible force that transforms winning systems into losing machines. It is the silent enemy that makes the smartest people do foolish things with real capital. By the end of this discussion, you will fully understand how your ego sabotages your career. More importantly, you will learn the exact steps to neutralize it before it incinerates your account. The intelligence trap. The story of Marcus. Let's begin with Marcus. Marcus was a man of immense intellect, holding a PhD in applied mathematics from MIT. He developed algorithmic models so sophisticated they would rival those of institutional quants. His backtest showed that even in the most catastrophic years, his models achieved 40% returns. The strategy was mathematically bulletproof and thoroughly researched. Then he started trading with real money. Within 6 months, Marcus blew through 3 separate accounts totaling $80,000. The failure wasn't in the math. It was in the execution. Every loss triggered a crisis of identity deep inside him. Because he defined himself by his intelligence, he could not accept being wrong in the face of the market. He would spend hours overanalyzing each loss, believing that thinking harder would solve the problem. But there was a fatal flaw. The more he analyzed, the more emotional he became. The more emotional he became, the worse his decisions got. This is the intelligence trap in its purest form. Marcus believed he could escape emotional reactions through pure logic. He treated trading like a chess match, assuming perfect rationality would lead to perfect outcomes. But markets are not chess games. They are psychological battlefields where emotional stability determines survival more than IQ. His ego whispered that he was smarter than the market and his analysis was superior. He assumed that deep research would eventually crack the code. But Marcus never understood that the market doesn't care about your degree or your effort. It doesn't care how many hours you spent on research. It only cares about one thing. Can you stay loyal to your plan while your ego is screaming at you to do the opposite? The 3 brutal paths of destruction. Most traders fail because the ego is a master of disguise. It comes with a different excuse every day, dressing emotional reactions in the garb of rationality. It destroys you in three distinct ways. First, the need to be right. Your ego views a losing trade as a personal failure. It ties your self-worth to a single outcome. If you win, you're a genius. If you lose, you're a disappointment. This is psychological poison. Think of a professional poker player. They know that losing a hand with pocket aces is just part of the game. They don't question their intelligence because of one hand. They understand they must make correct decisions based on probabilities over thousands of hands. But most traders cannot separate their identity from their trades. They take every market feedback personally. Imagine risking $100 to make $300. The trade goes against you. At the stop-loss level, your potential loss is $98. The price reaches $98.50, but you haven't placed your stop. Your ego kicks in. It'll reverse. I know this market. I've studied for hours. You move the stop. You tell yourself you're being flexible, but deep down you know you're on a path to disaster. You turn a $100 loss into a $300 catastrophe because you couldn't admit defeat. This cycle destroys more accounts than any market crash. The need to be right is Bunroot draining your pocket every day. Second, the illusion of control. The ego loathes uncertainty and desperately seeks control. This is why traders overanalyze and clutter their charts with indicators, seeking a certainty that doesn't exist. The liberating truth is this: you can control nothing in the market except your own actions. You don't control price, volatility, or global events. You only control your entry, exit, size, and reaction. Everything else is a narrative created by the ego to feel safe. When you say, "I know this stock will go up," you are lying. You have an opinion based on patterns, but you do not know. Please don't say you know. Don't impose that weight on yourself. Remind yourself that every possibility always exists. Support levels might work or they might not. You don't determine the outcome. Professionals think in probabilities, not predictions. They don't say, "This trade will win." They say, "This setup has a favorable probability, and I will take the bet knowing I can still lose." This subtle shift in language represents a massive leap in psychology. The professional has murdered the need for certainty. The amateur remains its slave. Third, the comparison trap. The ego is fueled by comparison. Social media exacerbates this, pushing traders out of the game by showcasing curated highlight reels. You see a $10,000 profit post, and suddenly your consistent $200 day feels like a failure. Your ego ignores the 50 losing days before that profit or the reckless leverage behind it. It only sees your inadequacy, forcing you to take unnecessary risks to catch up. You increase your size and take low-quality setups out of envy. Your ego wants the impressive result now. It seeks external validation of your talent. Professionals, however, only score themselves on execution. Did you follow the rules? Did you manage risk? That is the only scoreboard that matters. How to kill the ego. Radical acceptance. How do you kill your ego before it kills your account? You must achieve a radical acceptance of uncertainty. You must internalize at a bone-deep level that you cannot control market outcomes. You don't need more indicators. You need more acceptance. Markets move on collective emotion and institutional flows that no individual can fully grasp. When you accept this, magic happens. The need to be right disappears. A loss is no longer a personal attack. You stop measuring your worth by your win rate. You become emotionally neutral and independent. This is your superpower. Please internalize this. I do not know what the market will do next, and I do not need to know. I only need to execute my edge. Read this every day. Identity separation and the power of the journal. Your trading results are not a reflection of your intelligence or worth. A losing trade doesn't make you a fool. A winning trade doesn't make you a genius. These are simply outcomes. Professional traders develop identity discipline. They completely separate their self-worth from their results. They create a new identity. I am a disciplined executive of my trading plan. This identity is based on the process, not the money. Society teaches us that winners are valuable, but in trading that programming is fatal. To protect yourself, you must also use a journal. The ego thrives in the shadows. Journaling drags it into the light. Document your emotional state before, during, and after every trade. Over time, you will reveal your cycles. You will see that every deviation from the plan stems from a need to prove something or a fear of missing out. Once you recognize these patterns, you can consciously choose a different path. Strategic ignorance and reframing loss. The ego craves information, believing it leads to control. Instead, embrace strategic ignorance. Limit your information during trading hours. Ignore social media and the opinions of others. Information creates emotional noise. Plan your trade during quiet hours, then execute it in isolation. Don't check Twitter. Don't watch financial TV. Just execute your plan based on price action. Finally, reframe losses as tuition. Your ego sees a loss as a judgment. You must see it as the price of education. Every professional has lost millions collectively. Losses are the cost of doing business. When you lose, ask, what did this trade teach me? If you followed your rules, it was a good loss. If you violated your rules, it was an expensive but valuable lesson. The ultimate test, James's secret. How do you know if your ego is neutralized? Take a trade, follow your plan, and get stopped out. If you feel calm and ready for the next setup, you're on the right path. If you feel satisfied because your discipline was perfect despite the loss, you have arrived. The goal is to lose without taking emotional damage, to separate your soul from every individual outcome. Let's conclude with James. He made millions for a decade. His secret: I spent 5 years trying to be smarter than the market and lost. I spent the next year learning to be dumber, simply following rules without thinking I knew better. James killed his ego and became unstoppable. Your ego is not your protector. It is your executioner. It makes you emotional, reactive, and unprofitable. Kill it before it kills your account. The market only cares about one thing. Can you execute your plan while your ego is screaming at you to break the rules?